corn? Yeah, I like the corn. I like the
Okay,
corn a lot
peace.
to be all in on this fucking thing.
Checkmate loves the fucking corn, boy.
Love the corn. And at the same time, whenever I look, I'm like, what else do I buy? What else do I do to store my wealth? Gold? Okay, great. I hold some gold. Finally, I can buy 3 more hamburgers. What a fantastic result. I held it for like 6 years and I can get a sandwich. Like, okay. But like
Yes.
the corn changes your life.
Alrighty, Roo. Welcome back to the pod, Mr. Checkmate. A pleasure to have you.
Thanks, mate. Thanks for having me back on. It's been a while.
It has been a while, and yeah, I'm really stoked you agreed to do this because you've now become a man in demand. You've recently launched your own, what would you call it?
Yeah, I mean, mate, it's a full stack Bitcoin service. No, like it's I mean, look, the general crux of it, it's a newsletter kind of first and foremost and a YouTube channel because essentially there's so much cool data out there for Bitcoin and very few people who know how to interpret and talk about it properly. So part of it is kind of helping people understand, but really at the core of it, Checkonchain is about helping people navigate. Because one of the pieces of feedback I got from a lot of people when I was doing all the videos at Glassnode is understanding why the market moves helps them survive, right? So there's kind of two buckets. There's people who actually want to trade these markets and find
Yes.
that edge in alpha. We can certainly service those guys, but there's also people who just want to understand why the hell something happened. They don't really care that the market moved up or down. They just want to understand why that happened. And on-chain data is just full of this kind of information, and it just helps you understand, helps you navigate, and kind of survive the ups and downs. Because let's face it, hodling is a hard job at the best of times. It's a lonely job.
Yeah.
And having that kind of almost like a Sherpa to just help you get through the volatility, I think is, that's kind of the crux of it all. That's what I want to do it for.
Oh, I love that, man. I was going to try and squeeze you into a corner and say, okay, checkmate. I mean, we've got a lot of DCA folks. We can call ourselves the DCA army, rivaling the XRP army. And then there's people who might just buy big chunks. They know the rules of the game. It's basically like
Yep.
sit and forget and look in 4 years' time. So I was going to say, like, who are these people that are watching things on a day-to-day basis? But you just answered the question right there. Some people really would like to understand what the hell is going on. What has happened in the last, call it the last couple of weeks, where we're seeing now Bitcoin off 20% from its all-time high. We were all expecting this thing to rocket ship to 100K. Some people say before the halving, Adam back and the like, and I'm not giving him shit because it's Adam back.
Yeah. 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 He'll be
No,
on your computer if you're not careful.
exactly. No, it's exactly right. But yeah, from my perspective, sometimes it seems so inevitable, and you see these things happen, and you're like, what in the hell's just gone through? But before we dive into some of that, I'd love to just understand your motivation now for moving, just kind of on a personal level, into doing your own thing, because I think there's so many people in this Bitcoin space that are deeply passionate about what they're doing. Perhaps they got one leg in fiat, the other in Bitcoin. And I think you're in Bitcoin in its entirety, but now you sort of are doing something of your own. So talk to us a little bit about that journey you've gone through over the last however many years.
My background's a civil engineer. So when I was doing the whole fiat run, it was civil engineering. I kind of fell down the rabbit hole in 2018, and then I moved to London mid 2018. So for a lot of my like formative Bitcoin years, when I'm just trying to work this stuff out, I was doing my engineering, designing mines and tunnels. We were talking about before we hit record, coming home, you're tired, but then you've also like, yeah, but there's this opportunity to like write about this thing and learn more about it. And I just started writing. And at that time, on-chain data in late 2018, 2019 started to come out. The very first metrics, Coin Metrics released the realized cap, and that was really quite formative. I think a lot of people get hooked on that metric because it makes a lot of sense, like an on-chain market cap. Show me the value invested. When you buy a coin and withdraw it, it's saved at that price until you spend it. And that's like a real, the more you think about that, and I still think about it today, it's a really profound concept that gives you so many tools. So anyway, I became fascinated with markets. I started writing about markets. I became fascinated with Bitcoin, started about writing about Bitcoin in its own market.
Yeah.
Then on-chain data kind of came out and I was like, holy shit, now I can start visualizing and seeing this stuff. And I was one of the first, and certainly I think probably the earliest educator. I've got videos back in 2019, which is like me sitting in a tin can with my shitty ass laptop and mic, just talking about what the realized cap is. I've got one on like energy money where I talk about how we can use difficulty and all this stuff to build cool models. And anyway, it just fascinated me. Long story short, Glassnode came along in 2021. And they essentially had all the metrics that I mean, I literally printed out reams and reams of PDFs that my friends made fun of me of because I'm reading these fucking weird papers on the plane. They're like, what is this weird magic math that you're looking at? Anyway, it's all these on-chain concepts. Glassnode had all of these metrics, but no one really knew what any of them did. So they brought me on as the first analyst. I was like employee number 8. And then I built the analyst team from 1 to more than 1. We got to 4 at the end. And through that process, and here's a kind of a fun fact. I wrote my first The Week on Chain newsletter at the very top in 2021 in March. So we're pretty close to the top. And my last edition was as we broke the all-time high here in 2024. So I kind of learned with all the tools at my disposal through the bear market, the ups, downs, the sideways. And my kind of line of thinking to my analyst was, all right, guys, we're in a bear market. We're going to be here for at least 2 years. Let's learn what these tools do, build the tools in the bear. So when this bull market comes, we're going to have a full tool belt and no one in the world will have this stuff. And that's exactly what we did. So anyway, going through that journey in the last probably 12 months, I was getting to the point where I was like, I feel like I've learned a lot of what I'm going to learn, right? I needed something as a bit of a challenge. And I've made 120 odd episodes at Glassnode. Each one's like half an hour. I looked at the other day, we got like 35 years of watch time. There's 35
Sure.
years of people sitting there looking at it. And now, by the way, there's not only that. So I've had Glassnode videos. That's the public side. I've had my own newsletter where I do 2 other videos every week. So I don't think there's anyone in the world who's spent more time rambling about on-chain data than me in a recorded fashion. So I got literally years of content. And eventually I was like, you know what? I just feel like the next challenge is not just a market analysis, right? Analyzing the market's one thing, learning what the data is another thing, but building something that's yours is a different challenge, right? So in
Mm,
many ways, I'm doing a lot of the same shit that I've always done, but this time I'm doing it for me. And in that way, the tagline we have at Checkonchain is your Bitcoin personal trainer. Because at the end of the day, the way I like to look at it, people come in expecting it to like predict the next price. And that's just the most, it's not what it's going to do. Nothing's going to help you do that, right? Literally flip a coin. You're going to have better luck. What it will do is say, well, you know what? Here's what the next 3 months are probably going to look like. Let's bound out the different regimes. And just like training, when you're an F1 driver, you don't train for the specific corner with the specific guy overtaking you at the specific time. You learn how to react and respond, right? So
mm,
that's the way I want to think about it. It's like you learn to what the probabilities are, learn what the types of mechanics you should expect are, what's driving it, so you're prepared for when it happens. So when the market sells off like it did the other day, you shouldn't be surprised because there's been long-term holders spending like crazy for months. At some point in time, you're going to have a correction, guys. Like this just
yes.
happens. So you're prepared for it. That's what Check on Change is all about. Personal trainer, be prepared for it so that when it
Perfect.
happens, you're like, oh, I've done that reaction before. I've gone through that mental calculus before it hits me. So when it sells off, you're like, now I'm actually going to buy this dip because I'm not scared because I know why it's happening. I'm actually
Mm,
going to wait, or I'm going to wait and wait. There's my opportunity. And that's my signal.
brilliant. Oh, I love that, man. I don't know if you've ever read anything by Ray Dalio. It's probably Principles, that book, but
Yes.
he talks about it's another one of those. And in your world, it'd be like these on-chain indicators are all flashing. And when it last happened like that, and the time before, and the time before, this is what happened. So the probability is that it's going to happen from here.
And the next level to that, just one final thing there. It's not only when these happened, this happened. It's this is why that metric got to that level in the first place. So, for example, the amount of people who've been like, nah, bro, it's not long-term holder spending. It's just GBTC. And they're like, they're bankrupt estates. I'm like, okay, when was the last time you surveyed the guy you bought Bitcoin off? Did you ask him whether he was bankrupt? Did you ask him whether he was just a hodler taking profits? No, because one sold Bitcoin is one sold Bitcoin. You know what
Yeah,
I mean? Like the
yeah, yeah.
mechanic is it doesn't matter that it's GBTC. They're selling. You know
This
what I
is
mean? It
what's
doesn't matter where it comes
happening.
from.
It's
Yep.
sort of agnostic in that sense, 100%. But yeah, to tie a bow on this little piece here, we wish you all the best here in Australia.
Thank you, sir.
You're one of the leading voices, at least from an on-chain perspective. In fact, I don't know anyone else. So,
There's
um,
not many of us, to be honest.
no,
It's a
and
niche of a niche of a
you've
niche.
got an edge. And I think going forward, your skills are only going to become more and more valuable because as we see more and more institutions adopt, they're going to want to know what's happening on chain
Totally.
because it's not like any other market. It has that full transparency. And so it's a fascinating space that I just don't have the brain for. I'm just
Yep.
the lawyer brain, you're the engineer. But yeah, all the best, man. We wishing you all
Thank
the
you very
best.
much. Yeah, the way I think about it, just to kind of frame it up for people, and you probably notice this, like when the market's just doing nothing, your confidence that it's going to continue to do nothing probably goes up. But then imagine you woke up tomorrow and Bitcoin's at 30K or it's at 100K. In both of those two scenarios, the first thing you go is, "Holy shit, what happened?"
Yeah.
That's the question we're trying to solve. Exactly that moment. No matter which way it goes, it's like, why did we get there? And be prepared for when it happens.
Yes, totally. All right, so we've got a couple topical things to discuss. Let's just start off with some of the more recent content you've put out. Actually, probably some of the first things you've done at Checkonchain. And I want to just talk through some of the various metrics. So I'm not going to pretend like I understand all these things, but maybe you can just touch on some of these at a very high level. Because when I was reading your report, it left me a little bit blue because I was like, dude, I thought that we are in a bull market. I thought that we
Did you
are.
read the first half though? Did you get past the paywall?
Oh, yeah, I
No,
read
this is
the
why you
first
got to
half.
get past the paywall.
Oh,
Behind
shit.
the paywall is
Okay.
the bit where because I deliberately made you blue because I know what comes next. That
Okay.
you
It's
would
a,
understand, right? This is the content game. This is like trying to get the tiles right or
oh
getting whatever it
boy.
is on like the headline. It's tough.
It's the on-chain equivalent of clickbait. You terrified me because I was
Exactly.
reading and I was like, oh God, these indicators aren't looking good. And there was a whole bunch of things that was like, well, okay, let's dive into them because I actually wrote them down. I was like, maybe you can just tell us what the hell is going on and why they were flashing at a time that other sort of peaks, whether it was in 21 or 2017, they were flashing similarly. And that's what I
Yep.
was like, oh God. So let's get into that. Okay, so value days destroyed.
Mhm.
You said that typically this peaks around 3 to 4 months before a new all-time high, and it
Yep.
is now reaching pretty frothy levels, which I was like, oh God. So what is it actually telling you, this metric? And and why are these long-term holders actually selling if they're bullish? Don't they
Yep.
understand the whole bloody, don't
Yep.
it's time in the market, not timing the market.
Yeah, no, exactly. So my grounding for all this stuff, the reason why these patterns play out time and time again is because the ape brain that we all have is tens of hundreds of thousands of year old hardware. It's not equipped to deal with markets. Human beings are not very good at markets. We generally lose. That's why you see the statistics of like 5% of people make money, and that's true numbers, right? So the value days destroyed metric, it's essentially looking at time and volume being flushed out. So let's take a long-term holder coin. Not only did he probably buy it in the bear market, so he's got a low cost basis. So when he spends it, he's going to realize a large profit.
Mhm.
The other thing he's got locked into that coin is what we call coin days. They're like a measurement of holding time. So one Bitcoin held for 365 days has 365 coin days in it. When he spends it, that value gets destroyed. So when we're looking at value days destroyed, this is one of these metrics that TXMC came up. It's really, really good. It's essentially looking at time and volume getting flushed out. Long-term holders taking profits. Now, when do long-term holders take profits? Almost always as we approach and break through to new all-time highs. Why do they do this? Because remember, a lot of on-chain data, and this is a really important point, and actually I've got an article coming up that will explain a lot of this. When you're looking at on-chain data, you need to say, who is the perspective from? If you're looking at long-term holders, they're the smart long-term holders, right? They've been around for a long time. If you're looking at the short-term holders, you're looking at people who've just bought, and they have very different reaction functions.
Mm,
So the smart money, if you've got a lot of coin and you need to spend it, and if you're a seller, big seller, what do you need? You need lots of buyers. Where do lots of buyers show up? Around all-time highs and late in the cycle, right? They don't show up in bear markets. They show up late in the cycle and as we bust through all-time high and
yeah.
in and around the halving. Because every man and his dogs, I mean, ANZ, my parents' brokerage had a bloody banner for the halving the other day. So these are the people,
We'll get into that.
who are
Yes.
buying. So of those long-term holders, they're spending a lot of coin. They're flushing out a lot of coin days. About 30% of this is GBTC, which, as I mentioned before, you can slice and dice this thing and try and work out how many people are rotating. At the end of the day, as an engineer, I don't really care about the 3 or 4, 5% factors. Show me the things that affect 90% of the problem. Most of GBTC is just bankrupt selling or arbitrage traders. So therefore, it's sell side pressure. I don't really care about how we want to slice and dice it. I've not seen numbers big enough for me to dissect it further. So yes, value days destroyed has hit a peak, but it usually hits a peak on that first burst of liquidity, right? What generally happens then is people actually stop spending. And this is where you miss this in the
This
behind the
is the
paywall.
second
This
part.
is where the magic happens. So yes, long-term holders are spending. Yes, value days destroyed is high. But the most important thing, I was talking about mechanics before. There's two things that I highlight in that piece. The first one is that we have a slowdown in that spending. So those long-term holders, they're taking profits. They've been sending coins to exchanges, but that's slowing down. It's still happening, but it's slowing down. So therefore, that's like sell pressure coming off the boil. They've
Yeah.
taken their first round of liquidity, and often the market keeps going after the value days destroyed its peak because that sell pressure kind of backs off. And the second part, which is actually why it's called, is the Bitcoin market top heavy. Really, this is a concept that I think I probably pioneered, and it's a really powerful one. What creates a bear market? It's when too many people buy too many coins at too high of a price.
Mm.
So, how do you measure that? And this is why corrections are super powerful. When the price drops below their cost basis, we can see it. Their coin goes from in profit to in loss. So, as we get to the bottom of our consolidation range, I essentially look across a bunch of different cohorts and say, how top heavy are we? Show me now that we were at 73, now we're at 60. Show me how many people have gone from in profit to in loss. And what we generally see is when that number explodes higher, meaning lots of people bought the top, we're top heavy, precipitates a bear. I won't tell you whether we are. No, I will. We're not top heavy, right? When we look at a lot of these metrics, things actually look really, really quite healthy. It looks like every what I'm calling a garden variety correction. So it's
Yeah.
amazing seeing the timeline go super giga bearish because for me, I look at that and go, all right, everyone's bearish. Everyone here is inexperienced, right? You look on Twitter, no one knows what the fuck's going on.
Sure.
Whereas I'm looking at what's actually happening inside the supply. Now, of course, I could be wrong. Things could play out, but looks like a garden variety correction to me, and everyone's panicking. I'm like, all right, now I'm going to my dashboard, my tools to be like, what do I use to buy a dip? Because that's what I care about right now. If everyone's panicking and I can't see a risk vector, then I'm in dip buying mode.
Yeah, fair enough. And I suppose the explanation you just gave applies equally to the MV/RV ratio.
Yes.
Yeah,
Yeah. So
basically.
MVRV is
Yeah.
essentially the unrealized profit. So why do long term holders take profit? Because they're in profit. They've got a big green number in their portfolio. That's what MVRV,
Yeah.
showing how big the average green number is in everyone's portfolio.
And I really like that because I think if I remember the number offhand, it was like the average person right now is at about 126%
Yep.
profit. And historically, it was sitting at about 350%, which
The usually peaks above 3.4, which is 240%.
yeah. Okay, there we go. So it's like, so it still suggests that there's a little bit more of a runway to go, no doubt. Okay,
Yep.
good. Okay,
Yeah,
well,
no,
that's
and that's the thing, right? A little bit of fear tactics on the left, but at the end, if you keep reading, it kind of goes through the mechanics and goes, you know what? It kind of looks like a dip. And in many ways, we've bumped our head on this level, whether it be MVRV or all these things. The market has hit a very natural point of resistance. It'll take time, it'll take sideways, it'll take down, but
mm,
the more sideways, the longer and the downer that we go, the higher up we're going to go off the back of that because markets need to recharge and take a breather. They're kind of like a marathon runner, right? If you don't pause and just have a drink, you're going to pass out. You're not going to make it to the finish line. That's kind of what happened in 2021. We went so hard, so fast with GBTC sucking in like 650,000 coins in
mm,
4 months.
yeah.
It was just like the marathon runner who sprint and he got about 2 kilometers in and he just passed out because he couldn't do the remaining five.
You guessed out. Okay, yeah, that makes sense. And this is just anecdotal and obviously not market commentary or anything, but people have just said generally it makes sense for us to, and this would be a more, I guess, a healthier run up is if we sort of see these corrections of 20% along the way, build a
Absolutely.
new base of support, and then take the next leg up rather than seeing this parabolic sort of now we're
Yep.
in six figures.
And let's not
And
kid ourselves, right? GBTC has sold 300,000 Bitcoin. Long-term holders have sold another, I think the total is like 1.1 million if you combine all of it together. The
yeah,
market absorbed 1.1 million Bitcoin since we broke through like 42K. I mean, that's people are under it, and we haven't even had a 20% pullback since FTX. Sure, we're at 60K and everyone's bearish. It's like, guys, the market is absorbing these coins like you wouldn't believe. It's truly it's remarkable watching the narrative not play out in on-chain data. It's my favorite bit about the whole thing. You're watching people arguing on Twitter, you're not seeing it in the data. You're like, I have to fade all this noise.
Yes. Oh, and it's so funny because I don't even know how long ago it was, but I remember when it crossed 100K in AUD terms.
Oh yeah, that was good.
It was good. We felt so good. And now it's like whatever, like 95, I don't know what it might be. And people are a little bit blue, myself included, in a sense. You feel a bit cheated, but it's this instant gratification, short-term thinking, high time preference thinking part of our brain that just switches on during these times. When in doubt, zoom out. And I think you put something out recently, maybe it was today actually, where it was like, let's just get things in perspective. I think there's only been like 38 days where Bitcoin's been above 61K,
Yeah,
literally in its history.
38 days
So
in the
it's like,
whole 15-year history.
yes, exactly. And I put something out recently too along that vein, and I found it from a site called Case Bitcoin, a
Yep,
really
it's a good site.
underutilized site. But yeah, I know it is really worth at this point realizing, cool, we've taken a little bit of a breather. We are down 20%, but if you've got fiat, now's the time to load up, I reckon.
One more thing I touch on in the first piece we did, what I was talking about with being top heavy. I'll spare you all the details, but the short of it is there's a thing called the short term holder cost basis, currently about 58,800, something like that USD. Now that would be a level that you probably don't want to see broken with too much conviction, because once you break that level, the concept I was talking about before, that's where we could potentially flip over to being top heavy, where suddenly you the further the price goes down, right? I mean, if you take price down to 20K, a lot of people are going to be in trouble and you're probably going to have a bear market, right? It's going to be scary as shit.
Oof.
Now, if you get below 58, 59, that's where you start talking about now there actually could be a lot of people who kind of transition from in profit to in loss, and it could start to like flip your bias. So that's the other thing I was talking about reaction time. Essentially, my readers are ready to go, well, if we get to 58, first things first, dip buy of the century, but with one bear market goggle on, right? Not both, but just one in case it doesn't hold.
Mm,
You then have to just be like, all right, now I got to be patient. Now I just got to buckle in and just weather whatever the hell comes next. But at least you're prepared for it, right? So 58K, 59K, that region, we kind of don't want to see that taken out with too much conviction. That wouldn't be a great sign.
okay, that's good to know. All right, so
Yeah. It could
checkmate
get
said
bluer. So
it.
just prepare yourself.
Yeah. The expert has said 58 is the level where fear can start setting
I'd,
in.
ra- I'd I'd rather not. Yeah, well, that's the right thing. Fear will probably set in at that point in time, and I'm sure that as people run this through, when you see that candle, if you see that candle, you'll know the fear I'm talking about.
No, I think that is fair. Because I was not expecting to see us dip below 60 anytime soon. So that would be a little bit concerning. Obviously, it doesn't change the thesis in any meaningful sense, but it does change other people's behaviors, the short-term holders, as you
Yep.
say, be more inclined to buy the top and sell the bottom, just the way they behave.
This
And
is
who
the journey
knows?
of the hodler, and I think this is the key point, right? It doesn't change the thesis. I'm not selling my stack if we go below 58.5, but I'm also prepared to be a little bit more patient. You just prepare yourself for it, because if it happens, I mean, you start saving some fare and you buy bigger dips, right? You start getting into stuff with more size, but like you got to be ready for in case it happens. But at the same time,
That's the ultimate, what you've just described is like if you're keeping your finger on the pulse from an on-chain perspective, and let's say you're looking at other factors like macro and whatnot, then you can start stacking fiat with conviction if you're
correct.
seeing signs that things are maybe frothy or there might be some negative stuff on the horizon. I unfortunately have not engaged with any of that in any meaningful detail. So when I've got fiat, it's like burning in my pocket, and I'm
Yeah.
like, buy right now. And as
Mate, I've been stacking cash for like several months to prepare to like launch a business, and I'm looking at it like it's a healthy bank balance. I'm like, I hate you. I hate this number
it's so
because it's not
upsetting.
corn. And I started stacking it at like 40, and here we are up at 70 and 60. I'm like, oh man, it's literally melting in front of me. But it's an investment in yourself, and that's what's more important.
100%, man. And I think you've just answered a question that I put it out today on X, so to speak. Any questions? And I thought one of the most compelling and certainly smart questions was, do you like the corn?
I love the
That's from
corn. The
Pete.
corn's
Yeah, I
great. I
mean,
know. And I
oh,
might actually know who posted that to that particular question. No,
oh,
I respect the corn. I enjoy the corn. I like the corn, and I'm amazed by the elegance of the corn. The corn
yes.
is a very elegant beast.
There we go. Okay, we can clip that piece. I think that's really good. Okay, let's talk a little bit about some other stuff in the Bitcoin world, shifting away from the on-chain stuff. So this weekend, and I didn't even prep you for this, but we had a UFC fighter talking about economics.
Austrian economics, right? What the hell?
Renato Money Moicano. And you can just imagine what was happening with me that day. Because it's like I had a bunch of boys around, we were watching, and I'm sitting there, my jaw drops, and I'm like, my God, what is he going? I love money. I love America. I love freedom. And then he starts talking about Austrian economics. And I was like, I'm getting this growing feeling that we are now transcending into mainstream culture. And it's starting to dawn on people. I mean, I listened to a couple MMA podcasts, and so Money Moicano pops up, and he's talking to another legend of the sport, Mike Bisping, and he's like, "Oh man, it's all about the Bitcoin." I told them I'm gonna stop the accent, okay? I want my bonus in Bitcoin. I don't know. What are your thoughts around that? I mean, obviously, it's kind of an unusual turning point, but do you think we're at this cusp, or like we're crossing the chasm, as people have said?
I think so. And look, I think it's very hard to judge these things from inside the world of Bitcoin. I think people misunderstand that fiat really wasn't used as a word until Bitcoin started banding it around. Gold bugs, I can't get rid of them on my feed moaning about Bitcoin, right? Well, they're not talking about gold, they're talking about Bitcoin. Everybody's talking, it is slowly getting to the point. And I've put out a tweet. In fact, I crossed my own tweet today. Someone liked it, and I was like, what the hell? That's an old one. And I said, Bitcoin is the most loved and hated, feared and revered asset of all time. And it is. It is loved and hated. It is feared and revered. I don't know why.
Yeah.
It's such a simple thing, and yet people despise it or build cults around it or like make it their entire it's so strange, but I think it is starting to cross over, and I think there's a decent portion of it that's going to be Bitcoiners just like being relentless, but there's another portion of it which is like the fiat money machine is also being pretty damn relentless, and I think a lot of people are just seeing through the fugazi now. They're just seeing that like this doesn't make any sense. And, if you take the US, for example, I
Mm.
mean, again, as an Australian, I can't really be a judge of what they're doing over there. But as far as I can see from this rock, it looks like they're looting the treasury. I don't know about you, but that's what it looks like to me. It looks like the politicians are two hands in and just hauling everything they possibly can and just giving as much money as they can to their buddies, their mates, and their family members. And you're like, this looks like a scam. And I think more and more people are just realizing like this looks like a scam. And I think that's kind of becoming the zeitgeist, which is in a way it kind of needs to happen. But at least we've got Bitcoin there to be that kind of safe haven to just get through to the other side.
Totally. I think from our perspective, so much of this felt like fairly inevitable. I don't think there's any sense, though, that people are going to become rabid Bitcoiners per se.
Agree.
Certainly won't be adopting the culture, some of the core tenets, eat meat, don't wear shoes. They'll still
So he
probably,
chairs.
yeah, so chairs. They'll still probably gamble. They'll probably still eat fiat food and stupid shit. But I think increasingly people are certainly waking up to some of the shenanigans, whether it's the politicians. Take the example of that woman who was trying to draw money and forgot her bank card, goes to the bank and says, "Hey, I'd like to get some cash because I'm buying a car for 3 grand." And they're like, "No, we don't have any money." And people are like, "What do you mean you don't have money?" You
You're a
wouldn't
bank.
believe how many people think that all your money is physically in the bank.
Yeah.
And, you know, the thing of fractional reserve banking, even fiat, as you say, it's like this is not in the lexicon. This is not in their paradigm. But then when it starts hitting them, kicking them up the arse, basically, and going like, "Jeez, I can't believe that in 10 years, McDonald's is up 100%. That's horseshit. That's not even food, man." And they've cut corners. They've probably added more filler and
Iron is if you have one of those tokens where you can redeem it for one Big Mac, it's literally a store of value relative to your fiat. I mean, the other
that's the
one is like
irony.
we're talking about the 100K for AUD. Just noticing when it took out the all-time high for all the other currencies, right? The last bastion of all-time high is the Mexican peso because it's the strongest currency, if you can believe that. But like you can see the debasement of the Australian In fact, there's a chart on my website. It's a very experimental metric, but it's called the BXY. And I had
Mhm.
this thought, I was listening to a podcast the other day. It's a very partially formed idea, but I'm like, what is the price of the US dollar? And the answer is you don't really know. Everyone measures it off the DXY, which is like a
Yes,
weighted currency basket,
exactly.
because because everything else is measured to it. So because the dollar is the unit of account, what is the actual price of the dollar? And I was like, well, hang on a second. What is the price of Bitcoin? Because my Australian dollar is clearly buying me less. We broke through all-time high long before the US one did. What is it in the Mexican peso? What is it in gold? So I started playing around with, like, monetary bases and geometric averages and all sorts of shit. And I tried to build, like, what is the price of Bitcoin? And it uses, like, how big is gold? Gold's the biggest weighting. So it's kind of like DXY, but
Yeah,
with Bitcoin as the unit of account. And then you can actually see all the other currencies. If you imagine that Bitcoin is the level of one, you can actually then the next step is plot the debasement of every other currency. Higher currencies are much weaker. The gold went through a period where it was very weak versus Bitcoin,
yeah.
through its bear market in 2012 and 13 and 14. And then now it's actually zooming lower. So it's strengthening relative to that level of one. So yeah, just one of those
That's
interesting
an
ideas
interesting
that,
one because
yeah,
isn't that called like Wittgenstein's ruler or something? Where it's like, are you measuring the table or is the table
exactly.
ruler or something? And it's like we need something that's not the dollar to assess the strength of the dollar against everything else. And
Exactly.
Bitcoin, it's such an obvious one, and so it's a great idea actually because
Because it's one of the few assets that trades in every fiat currency, right?
yeah,
Technically
totally.
speaking, yeah, Bitcoin, I mean, you could go anywhere in Africa and you'll find a Bitcoin to local exchange pair. Really, it's the dollar, Bitcoin, and gold. I mean, you can't use Australian dollars you can't even use them in Southeast
Oh
Asia
hell no.
most half the time.
One of the questions came to me as we were crossing 100K and whatnot. People were like, Bitcoin hadn't crossed its all-time high in USD terms, but we did in Australia. And I'm like, why? Well, it's
Yep.
because we've weakened. But I mean, Turkey was smashing its all-time highs long before. Like, I don't even know what the price was at that point, but
Yeah.
it's all relative. And I think it's that one thing that's incapable of manipulation, the predictable supply assurance, the fixed supply, those rules just make it the thing to measure other
It's
currency
the
strength.
right reference
It,
point.
it
Yep.
is the
So
right reference point.
amongst all the volatility, and this like I cannot get for the life of me cannot convince my old man to see this. He just doesn't believe it. It's like relative to what? Bitcoin is volatile, or the and I just flip the chart. This is the Australian dollar. When you sell your Bitcoin, you're buying this because you keep saying, "Oh, it's going down." I'm like, "No, that's going down. That's a debt chart that's going down."
Totally. And I do the same these days with people who still hold shitcoins. And I'm like, have you looked at the sort of ETH Bitcoin ratio? Or I had some Cardano fanboys on my timeline today because Robert RFK, he went and had a chat with, I don't know if he had a chat with Charles Hodgkinson from
Oh God,
Cardano,
yeah.
but he endorsed him. And I was like, my God, man, this is so dumb. Like, you don't have a clue what this guy's doing. Like, if you understood what that guy represents and how he's like, just basically scamming Africans and saying, put your beef and your beans and other bullshit on my blockchain.
Yep.
So I
I've
went,
got a chart on my website too that shows all the shit coins. I think it's a Willy Woo special, but I've
yes,
adapted it recently. It's all these coins just like trading down towards zero. So everything's above shows you that versus Bitcoin, they all just trade towards zero. That's just
the
this
only
long
problem is
term.
Doge. Doge is a powerful,
It
powerful
is.
coin.
Well, it is a powerful shit coin. And it's funny actually because Dogecoin, it also has its own little zeitgeist. So maybe not Doge itself, but like this market nihilism concept you've probably heard floating around,
Hmm.
which I think is really interesting. It's very sad because you've got people who are they just want to gamble, right? They've kind of lost their motivation to care, and it results in gambling. So it's a very sad result, but it is a very fiat result as well. But one thing I found quite interesting about this cycle is we've had Bitcoin run because you've had just true capital investment, and they skipped everything in the middle, and they just went to like Geo Bowden, right? And they went for the most ridiculous, shitty
Yeah.
culture coins they call them. And good lord,
Oh,
on Solana. But like, if you think about what that looks like, the market's got this like learned behavior. We know that shitcoins pump, so let's go to the shittest of the shitcoins. So once that game is done, I just feel like that markets don't like to reward the same thing more than once. So I feel like we could be getting much closer to the point where the market goes, you know what? these really are shit coins and there actually is nothing here. And money just starts to rotate back towards where it's going to get looked after, which is Bitcoin.
Yeah, totally. There was actually something the other day where it was called like rug coin, or I don't know what it was, but the guy basically was like, listen, I'm gonna rug pull you. And I think he raised like something like 30 ETH or something like that.
I saw it. Yeah.
I don't
It's
know. I was just
wild,
like
right?
going,
It's
but it
called
is,
rug pull.
yes, but it's almost as if like, yeah, we're sort of at the dying end of crypto, and so we have to go to the sort of farthest end of the spectrum in terms of absolute horseshit, that it's just like, come on, like it's become so patently obvious. There's no there.
There's
Anyway,
no there there.
it's fascinating, but it's also it represents, I think, it's a sign of the times where it's that
Yes.
nihilism. I remember my I think it was my first or second Bitcoin meetup, and this was in Adelaide, and it might have, yeah, it was like during the worldwide flu season, so everyone was a little bit on edge. And this woman who was certainly unhinged just went on about how she had put her entire super into Doge. And I was like, oh my God. Firstly, I thought this was a Bitcoin meetup. But secondly, I was like, my God, I just don't even know where to begin with you, lady. And it was
Yeah.
all driven by a sense of like nihilism. And it's almost like that American Huddle thing where shitcoiner is ultimate nihilism, because it's like, I'm either going to die like broke on the
Yep.
streets, or I'm going to drive a fucking Lambo. There's nothing in between.
That's
Whereas
it.
like Bitcoin is rational optimism.
And
It's
and
like,
and Travis Kling put out a good thread, and he's had a lot of talks about this recently. I think his thesis, he really nailed it. He's like, I can put $500 into betting on the next game of football, right? Or I can put $500 into a politically named coin and just like hope that it goes up. Either way, the $500 is not going to change my life. It's either going to change my life or it's not. And like it was never going to change my life anyway. And the same is true for $5,000. So that's where we're at. 5 grand doesn't really get you very much. At the end of the day, like it just doesn't get you a lot. It's very hard to make that 5 grand because wages are hard to actually earn. So it's hard to get, easy to spend, and then people are just like, "Well, there's no hope for me," right? It doesn't play out. So, I agree, it is rational optimism. I mean, I find that Bitcoin, like, grounds me, actually, like, keeps my I know it's gonna be around in the future, I can just rely on it, and even though I challenge myself all the time because, like, most of my net worth is corn, right?
yeah.
And my career is corn, like, and I'm now betting my own business on the corn, so, like, do I like the corn? Yeah, I like the corn. I like the
Okay,
corn a lot
Pete.
to be all in on this fucking thing.
Checkmate loves the fucking corn, boy.
Love the corn. And at the same time, whenever I look, I'm like, what else do I buy? What else do I do to store my wealth? Gold? Okay, great. I hold some gold. Finally, I can buy 3 more hamburgers. What a fantastic result. I held it for like 6 years and I can get a sandwich. Like, okay. But like
Yes.
the corn changes your life, right? So there's just not that much out there to buy. Everything else is a scam and it's tough. It is tough.
Yeah. But I'm actually looking to do an episode with someone in the near future where we're going to just talk more specifically about, should you be buying a property if you're a Bitcoiner? Um, I think you should. That's just my gut instinct. But
Well,
generally,
debt is good in an inflationary period, right?
yeah.
So as long as you don't blow yourself up, having debt in a period of inflation is technically good. I've been playing around with this question, and I don't have the answer for it. I do have a chart on my website, which you'll find, which is Australian house prices priced in Bitcoin, updated
Yes.
quarterly, goes down most of the time. But you also have to take a risk on, is the property market stable? What I keep coming back to, and again, I don't have the answer. I think it's more stable than the Australian dollar because I think in the event we get any kind of collapse in the Australian housing market specifically, they will kill the Australian dollar to save it, right? The Australian dollar is not first off the rank. The property market is first off the rank because if they otherwise
Mm,
they have to nationalize the banks. So my 2 or 3 steps ahead, even if there is a wobble in the property market, the government's going to kill the currency to make sure it gets papered over. So in a way, debt would actually make sense in that environment.
yeah. And also, it's something they can actually materially manipulate. And
Yes,
they can just
lot of levers.
import more people like me, uh,
Correct.
or worse than me, or better than me. Who
More
knows?
black podcasters to drive up rent.
Exactly, exactly. I thought one other thing we should touch on, because this is going to come out on Monday, and we're recording now on Thursday, the 18th. So 2 days from now, at about lunchtime here in Australia, we're
Mm.
gonna see the halving. Now, I'm going to put something out there it's going to rattle some cages maybe, but I'm not that excited. Like I'm not going to be having like a party
Is
or
this your
anything.
first one?
Yeah, maybe. I wasn't really a Bitcoiner before the
Yeah, fair enough.
yeah, I was just
You
like
weren't you weren't
watching it.
observing.
But am I going to have mempool.spaces open? Probably not. I don't know. Like it, it is just another sort of TikTok next block. It is an amazing feat of engineering that this thing can just operate like clockwork, irrespective of all the geopolitics and anything that's happening in the world. But I don't know. Like I wouldn't probably have a party. Okay, that's my controversial take. What do you think's going to happen now post halving? We've seen an all-time high prior to the halving. This is the first occasion it's happened, and in some ways that leads me to believe it's going to be kind of muted going forward because we've brought a lot of that demand forward because we had the ETFs, which obviously have taken a little bit of a it kind of cooled off a little bit of late, but yeah, I don't know. That's just my very uneducated way of thinking about it. So, what do you think halving means, and what can we expect, you reckon, in the next
Yeah,
12,
I'm
18
I'm
months?
glad you asked this question because strangely enough, I literally today, the first post is going out to our paid guys tomorrow, which is the first exclusive paid. So this will be good actually because this piece will be out before the podcast, so that's all good. Where I actually spent all day studying this problem of how big the halving is, what's it mean, what's it matter. So the kind of the big summary is that in every previous cycle when we've had a halving, it's like 120 to 150 days of sideways down choppy noise, right? And after 150 days, you're up 10%, right? But you've gone down 30 and up 20 and down 15.
Yeah,
So it's historically, and again, no one knows that that's what's going to happen, but historically speaking, you don't buy and go to the moon the next day, historically speaking.
yeah.
So the other thing that I look at is how big is the impact of issuance, right? So at the moment, current prices, and it obviously chops around, but 65 million a day in sell side pressure from miners.
Hmm.
So let's just for round numbers say 70 million, that goes down to 35. When you compare that to the just the volume trading IBIT, right? The volume of trading the ETFs on the exchanges, issuance is 50 times smaller than ETF trade volume. That's just IBIT and GBTC shares trading.
Is that
It's a
buying
hundred
volume, or is that sort of buying and
just
selling?
shares trading between anyone, right? So
Okay.
there'll be a lot of algos and all that shit, but nevertheless, the total miner revenue every day is 50 times smaller than ETF trade volume. It's 120 times smaller than Bitcoin's spot trade volume. It's 100 times smaller than just the amount of coins that get deposited to Binance every day. And it's 850 times smaller than futures trade volume.
Hmm.
So when people say, is that halving priced in? My engineering brain immediately goes, well, first, back of the envelope calc, do I even need to do this calculation? Because essentially, when I look at the scale of issuance versus everything else, I'm not going to spend 6 months trying to study something that we may not be able to work out the result of is it priced in for something that's going to move less than 1% of anything ever. So, you know what I mean? Like the
Yes,
halving
totally.
just doesn't matter. It's so small. Now, the counterpoint to that is it's actually quite meaningful in a bear market. So if we get a halving in a bear market, if you know wherever that point happens, historically speaking, because trade volumes are down, people aren't moving as much coin around, there's all sorts of factors. It's much more significant during a bear market, but during a bull cycle, it's completely and utterly irrelevant, certainly during this one. So that's certainly one framework. In terms of the more philosophical, I will probably have mempool.space open because I like their website. It's the front page of Bitcoin, right? They've done a bloody good job on it. But it is very much, that meme where it's the guy sitting at the computer and something happens and he raises his little flag and then he just goes back to staring at the. It's very much
Yes,
like that, right?
yes, totally,
Um,
totally.
yeah. So in my piece, what I essentially close out on, because I'm like, at the end of the day, I've just asked people to read and watch an article that said, "Hey, is the halving priced in?" We're not even going to do that calculation because it doesn't matter. So how do
Yes.
I close that piece? I'm like, well, what is the halving? It's a mechanical thing that none of us have to touch. None of us can touch.
Mm.
It's just going to follow that programmatic formula, which is super simple. And I compare it to what's going on in the US. 34 trillion, I mean, $34 trillion worth of debt. And I made that chart back before Bitcoin Alive. And I made it on the Thursday. On the time I
Mm.
got on stage on Saturday, they'd passed another $1.2 trillion spending bill. So, like, my slide was out of date between Thursday and Saturday. And they're growing their fucking debt pile 2.6 trillion a year. So, if you do the math on what that is, they owe 533 million Bitcoins in total and they're adding 26.2 million Bitcoins every year, to which you go, well, there aren't that many Bitcoin. And you say, well, maybe you should get some in case it catches on, right? Borrowing the words from Satoshi. So I
Maybe.
think the halving is the contrast between this is the shit show we're in. This is the alternative. I
Yes.
kind of like this one.
Yes. Oh my. And I just wonder when that turning point is going to be for a lot of people because the debt doesn't matter until it does. It's like that
Correct.
gradually and suddenly thing. And I mean, I saw a senator get up in a video the other day, and it was in 30 years' time, the US is on track to have $130 trillion in debt. And he's like, who is going to want our debt? And like,
Yes.
how are we going to service this? Like realistically? And
And I think
really
that's an
what?
important distinction. A lot of people like it's never going to get repaid. It's like, no, of course, it's never, it's not supposed to be repaid. It's supposed to be refinanced. That's the big delta that I think a lot of people, it's a bit macro focused, but it's not about repaying it. They're not planning on repaying it. They just need someone to own the debt so that they
Yes.
can continue to borrow from them. That's their problem. The problem is that they don't have as many buyers for the debt, which is why interest rates go up. Because if there's no one to buy, the interest rates must go higher to attract a buyer. And
Yeah.
eventually that buyer is the central bank because there is no other buyer. And therefore they just print the cash. So they're swapping cash for bonds, which is monetizing it, which is what creates inflation in the first place, right? They'll blame it on everything other than the money printing, but that's essentially what's going on. The government's going to spend too much money and they can't refinance. So the central bank will be the refinancing mechanism.
My hope is that there are enough folks out there that, let's say, post halving, nothing dramatic happens as you kind of expect, and that there are still more clues along the way, more breadcrumbs leading them to this like little conclusion that says, maybe I need a little bit of this, maybe, just maybe,
Just
because
a bit.
if you're thinking about like all of these massive long-term debt cycles, we are looking like across the world, there isn't almost I can't think of any nations that are running actually, cash flow positive. And I mean, there are some countries I've seen that have relatively low levels of debt, say 30 to 50% debt to GDP. But for the one that matters, the States, it's sitting at 120 odd, and it just doesn't look like these people are going to rein in the spending.
No.
And they've got so many domestic issues, so much conflict, and yet they're spending all this money funding wars with
Yep.
no apparent end in sight. It's not as if there's going to be like a victory, I don't think. So
No, no, we're
it's heartbreaking.
starting these things, right? We're only just at the beginning of. I mean, this is what Lynn Alden says. Like nothing stops this train because the bear case of Bitcoin is that governments become fiscally responsive, and I I'm not seeing any responsibility whatsoever, whatsoever. It's the exact opposite. So as a result, my thesis is Bitcoin makes sense until it doesn't. The debt doesn't matter until it does. And these two things are just literally polar opposites, and it's going to happen real suddenly. And it feels like those wheels are starting to turn because they are in fiscal dominance. They must lower interest rates, not because they need to fight inflation. They can't service the debt. They can't service it. So as a result, it's like it's corn time.
It's corn time, man. And
Corn time.
that's a brilliant way to end the show because honestly, if we do what Bitcoiners do, we zoom out, you go, okay, does the halving matter? Nah, it's nothing. Are we down 20%? Yeah, it doesn't really matter. It doesn't change the thesis. When you really zoom out, and I'm starting to think like, sovereign individual kind of stuff, the fourth turning, I'm seeing, increased geopolitical conflict all over the show, even within countries like Australia. We're starting to see there are some tensions given the last couple weeks with what we've seen in Sydney. I don't know, man. I'm just like my spidey senses are all over the show, but I'm so grateful to have the corn, which most people
It's like
don't
a
realize.
grounding anchor.
Yes, most people don't realize that this is actually the risk-free asset,
Yep.
and this is what gives me so much optimism for the future. And so when we come out of this mad period with, presidents that are basically the living dead, and it's going to be a wonderful time, I feel, but I think you need to,
Historically, it is. I mean,
yes,
the one thing you don't do is you bet against human progress and innovation, right? Because over
indeed.
time, you will lose that bet, just like markets. Sometimes you get to 73K. Sometimes you just need to go and test 58 before you can head higher, right? And you got to go through corrections, right? And bear markets happen, and it's the same in everything. That's why I mean, markets are just people. At the end of the
Yeah.
day, they're just people and leverage. It's kind of it's emotions. So it would make sense. And actually, this is why I like that BXY idea. Is Bitcoin volatile or is humanity volatile? Because Bitcoin's pretty clean. I mean, I was looking at its bloody issuance formula today. There's like 4 parameters in there. It's really,
Yeah.
really tidy. Humanity, unpredictable. I don't know, man. I think Bitcoin just is a reflection of us.
Let's put a pin on that. Sorry to my friends on Twitter or X who had some questions I would have loved to have asked, but I've committed to keeping these discussions relatively sharp and sweet. It's been brilliant. I've really enjoyed this conversation, and to just sort of re-echo kind of what I was saying earlier, a lot of us are on Team Checkmate, and wishing you all the best, man.
Thank you, mate.
Tell us where we can find your stellar work, and perhaps it will lure me to become a paid subscriber so that I can get beyond the clickbait.
Yes, yeah, you can get beyond the clickbait. No, man, and that's the thing, right? It's a balance. You got to give enough free stuff that people are like, oh, I came out of that with something new, but you also can't give so much that you just end up with a list of free people and you end up going broke, right? So
Yes.
there's a balancing act. But so you'll find all my stuff, brand new website actually, checkonchain.com. We've got our charting suite, which is at charts.checkonchain.com, and you'll find the newsletter at newsletter.checkonchain.com. So yeah, grab me over there. If not, grab me on Twitter. Happy to answer questions. I love this kind of stuff, right? Just helping people understand why things happen. It's great. It's good fun.
Let's fucking go. Awesome, man. Great
Let's go.
conversation.
Good on
Thanks
you,
a
mate.
lot. Thank you.